Hi guys, how are you? My name is One Titanium. Welcome back to IMMT and Pure MMT for the 100%. Let's get started. I haven't done a video in this past week or so, and the reason for that is because we're in chop. It's just going back and forth. There's no real direction in where the market is going. Therefore, you do nothing. Okay, and this is what happens: that a lot of people don't understand where the market is, and therefore they start making stupid mistakes. They start chasing it. It's up one day, it's down the next day, it's back up the next day, and they chop themselves up, and they end up getting destroyed. So always understand what market you're in, and don't run around with these stupid ideas that you can make money every single day, half of a percent, and blah blah blah, and compound it over the course of time. This is bullshit. This is media salesmanship. Okay, they want to sell you books. They want to sell you all profit subscriptions. They want to do all that nonsense. So please don't do anything like that. All right. So always we're going to start with the dollar index, and the dollar index is in an uptrend. Okay, going back to 2007. And the reason I bring this up because once again we have this stupid little videos from FAKEMMTER Mike Norman saying, "Oh look, I predicted this and I predicted that." A legend in his own mind that he somehow predicted something. He didn't predict anything because I'm going to show you something very easy to understand. That the last time that the 10-year was at 3% was back on December 2013. Okay, let's make it 14. And when you compare that to the dollar index, and I'm going to have to take my little dollar, I'm sorry, my 10-year, I'm going to have to change it from log. That's why you see the lines are off. But you'll get my point. If you compare the dollar index to the 10-year when it was 3% last time, you're going to see something incredible. That the dollar index was all the way down here, which was about, I think, 79, okay? And the 10-year was up at 3%. And what has happened since is very clear that the dollar index has risen, and now so has the 10-year. We are right back where we were in 2014. So to say short the dollar based on interest rates hiking is just ridiculous. It's amateur hour at the very best. Okay? Let's go back and see what has happened since. Since 2014, we've had Brexit. We have had higher interest rates. We've had Donald Trump elected president who has since increased deficits. He has given tax cuts. The Fed has started to raise. The Fed has also unwound. To be not unwound, unwinding. Okay, a lot of factors, a lot of things in play there. So why is the dollar going up? And I think I don't need to keep it in here, right? We get the point here. 3% interest rates, dollar is down to 79. So I'm just gonna switch back to the dollar index. And here you are. You can see it very clearly back in 2014. Dollar index was all the way down here, which is about 79. Okay. So since then, Trump, taxes, you name it, QE unwinding, the whole 9 yards, and the dollar index has risen. Now, when the market understood that the Fed is going to raise rates, what happened to the dollar index? You can see this very big thrust up move. Okay? And ever since then, it's been just trading back and forth within this range. There's no devaluation due to higher interest rates. 3 years into it, there's no devaluation in the dollar index. Okay? That's just a fact. If anything, the argument that you want to make is that despite even tax cuts, increased deficits, everything, I keep saying it over and over because I want to pound that into your head, the dollar index is still strong. So I don't know how else to explain it to you people that you need to stop listening to fake MMTers. These people just make shit up as they go. They say, well, this is the way it is because I say it is, and I'm smarter than you are, therefore you should believe what I say, and that's it. I'm all profits. I know what the prescription is for the economy and all this bullshit, and you end up somewhere else than where you intended when you set out to learn how to understand macroeconomics and the monetary system. On top of that, you want to come to my page, you want to come to my YouTube channel, you want to message me and tell me that, oh, that's not the way it works, and give me these cute little oversimplified little memes as if you know what you're talking about. You're never going to win this argument, you little lurkers out there. You're never going to win, and I don't care how many of you. You could be 7 billion of you. You're never going to convince me that your voodoo economic bullshit is real, because I trade money using real economic data in the real world. You don't. Okay? You guys do whatever it is that you do. You circle jerk each other, give little smiley faces, little hearts. You're all morons. You don't know what you're talking about. You're all driven by ideology and free lunches and the socialist, anti-government, anti-capitalist bullshit. That has nothing to do with macroeconomics. One thing has nothing to do with the other. Okay? So I know you guys come and lurk and you watch our little pages, and because we matter. And the reason we matter is because we get shit right. You never heard me say, "Oh, the great unwinding is coming. Oh, the dollar is the mother of all shorts." You guys never heard me make any predictions, okay? Nor will you. But I can certainly tell you what bullshit is, okay? I can do that. I'm an expert at that. I dealt with the libertarian Austrian retards for a decade. You guys think you're gonna come in here and change me? Especially when I've been right the whole entire time. When you guys didn't even know what MMT was. Now suddenly you're gonna come in here and tell me how MMT is? You're crazy. You're crazy. Seriously, you got rocks up in your head. So let's get started with the video. With the analysis this week, very clearly, we are having this channel coming down, which is what I call a tight. And typically, if you're going to have a 1, 2, 3 down, it should be a lot more thrusty, meaning that it's just going to be kind of a relentless kind of move, kind of like it was here. This is like a thrusty move. It hasn't happened, doesn't mean it can't. Anything can happen. But right now, usually when you get a thin and then a thick down, you get another thin move up. Okay? The first target would be the previous high, if it does break out of here. You think the dollar index gives a shit that the 10-year went to 3.08 or 09 or whatever it did? Doesn't give a shit. Okay? Because that's not what drives it. And what is the difference between 2013 or 14 till today? Well, I'll tell you what the difference is, that we have lower unemployment, we have more productive output, GDP is growing at a faster rate, and inflation is tame. The reason we had the recent spike in headline inflation was what? Energy. Okay? Look at all the numbers of energy. Outperforms everything. Same thing with transportation. Okay? It's been high. Has nothing to do with rate hikes. Nothing. That's just ridiculous. So what does that mean? Well, what it means is that the production and the functional economy performing well is what values the dollar, not some rate hike. The reason we raised rate hikes is because we know we were going near that full employment. That was the whole point. That's why the dollar is where it is. Okay, it's a lot higher than it was back in 2014. You can't dispute that. Okay, so let's look at the 10-year real quick. And again, you're not going to see anything that's like wow. There's no wow in this. It was hugging the bottom of the trend line. Okay, let me fix it a little bit. Hugging the bottom of the trend line. It was trying to hold on. Cross this line, which was a consolidation, and it's not very difficult to see. Okay, here's a consolidation, 1, 2, 3 down, formed this structure, and it had two choices: either collapse, which it had no fundamental reason to do, or push up. Okay, it pushed up. So what? No big deal. It's still within this structure. And again, I'm going to say it until I'm blue in the face. These structures end up lower. Not always, 75% of the. And if you don't believe me, well, I told you this was going to happen live, right on this YouTube channel with the Bitcoin USD. Okay, that this is going to resolve to the downside. That's exactly what it has done. And now we're in this consolidation. It's a bear flag, and we're looking for one more down. Doesn't mean it has to do it. Doesn't have to do anything. Doesn't have to do anything. I am telling you what is likely to happen. Okay? Not I'm not predicting anything. I leave the predictions to the all profit gurus, with their little fucking crystal ball. Great unwinding, dollar index, mother of all shorts, the blow off top, all these stupid things. There's going to be a recession in 2010, 2011, 2012, 13, 14, 15, 16, 17, 18. Now it's going to be 19, 20. You never hear me say anything like that. Why? Because I don't know. I have no clue. I only look at the data and tell you what the data is likely to do. That's it. You want to look at the tip versus the 10-year? The tips are to protect against inflation. I don't see that tips are outperforming the 10-year. Okay, this is 2014 right here. This is the high. We were more likely to see inflation back in 2014 than we were today. We were more likely to see inflation in 2011 with all the QE and all that stuff and all this nonsense people were talking about than we are today. It's much lower. It is. Okay. So what inflation? Well, the government is a price setter. Price setter of what? You think multinationals are going to sit here and be like, well, no, I'm forced to borrow from the U.S.? We're in a global economy. They can borrow anywhere in the world. You think little mom and pop shops are going to, raise their prices because interest rates went to 2%? Of course not. 75% of all corporate debt will be rolled over in 2020. And I think 45 up to 2025. So you think these interest rates are going to set prices higher? Bullshit. Here are aggregate bonds, okay? Going back to 2014, they were exactly where they are today. Nothing has changed. It's in this range, going back and forth. Alright? There's no big selling. And if anything, this structure here is going to lead to the upside. Okay? So, again, we've been raising rates for 3 years and nothing has happened. Here's agriculture commodities going back to 2008. Look at that. Look at this destruction. Okay, down 61%. Is that inflation? I don't see inflation there, do you? You know where oil was in 2014? It was all the way at $105. You know where it is today? 70. 70. It went as low as 20 something, 21, 22, whatever it was. You're going to tell me this is inflation because government is raising rates, the Fed is raising rates, and it's government is a price setter and bullshit? Come on. You guys cannot fall for these kind of things. You cannot fall for amateur hour. Please. Okay? Don't do that stuff. Don't listen to these fake MMTers. They're full of shit. Okay? They don't have any requirement to be held accountable to anything. They just say I'm right for the sake of saying they're right. They're legends in their own minds. You guys are all idiots. They're the smart ones, and they tell you how it is, and you believe them, and then you come in here and bust my balls. No, I'm going to bust your balls. Okay? I've been doing this 10 years. I control you much better than you control me. Believe me. So let's talk about oil since we're here. Oil is doing that. What I was telling you that Mike Norman told you to buy at 75 because China is the price setter. Remember that one? Yeah, that worked out great, didn't it? Anyway, that came down. It's still low. It's testing these previous highs. Had a thrust up out of this structure. It has a 1, 2, 3. We're looking for one more down, and then possibly it can go back up again. Okay, and then it would lead to something sideways, something like this, of a sideways move. But again, when you look at the overall structure, okay, this is bearish. Same thing you saw in Bitcoin. This is bearish. Doesn't always have to happen, but the majority of the time, 75% of the time, it's going to lead to the downside. All right. Now, is it going to happen here? Is it going to happen here? I don't know. I cannot tell you that. I don't have a fucking crystal ball. I tell you what I see. Turkish lira, all the way up here. I'm just going to jump around, hit some of the highlights. Big thrust up, consolidating here. Now, if it comes all the way back here, we're going to start looking for that, what I call an M pattern, and then it could resolve to the downside. We're not there yet. Okay, we do have the lower low. We don't know on a chart how this is going to play out, but if you look at it fundamentally, and they have to roll over 195 billion dollars by in the next 11 months, the likelihood is this is not over. Okay, you're going to get another spike up, at least one more. So we'll just keep an eye on that. Let's take a look at Euro USD. Still battling in here. We can make an argument that this is a thrust up. Now it's pausing, one more down, something like this, and then possibly we could see another wave up to complete the 1, 2, 3 up and then down. That is possible. The other possibility, let me just put that back. Okay. The other possibility is that we just break down here. That you do 1, 2, and then just collapse. Okay, and we'll go back and test the bottom of this and possibly even break it. There is sufficient evidence to suggest that will happen. But right now, like I told you, there's nothing but chop. That's why I don't make videos. There's nothing to say. Here's the Emerging Currency Strategy Fund. And again, what are you seeing since 2011? That foreign currencies are going down. All right. Even after we raised rates, doesn't matter. They're getting crushed. You want to look at the Brazilian real? What do you want to look at? Turkish lira, Argentina? What do you want to look at? They're all getting crushed. Okay. South African rand, doesn't matter. They're getting their asses handed to them. Australian dollar, New Zealand dollar. I mean, it's a bloodbath. It's pretty ugly, believe me. And you got mousy boy Mikey sitting there telling you, "Yeah, the mother of all shortages is the dollar because of higher interest rates." Good God. Good God. Amateur hour. All right. S&P 500 continues to grind up. Let's zoom in a little. Well, before I zoom in, let me show you something. You'll see that you had this move down. It was a very thrusty move. Then it came back up, came back down, and then grinded higher. Broke the previous high, but it's not very convincing at this point. So typically, again, the way this works out is we should get one more down. Something like this. Okay? This would be a pause, and then we would look for more upside. Alright? Fundamentally, there's nothing wrong with the economy. You have increased deficits. Loan growth is fine. Wages are picking up their growth. Everything's looking okay, fundamentally. All right, but again, if you go back to 2000s, you kind of had the similar structure where you had 1, 2, 3. You had this pause, and then off we went. Okay, so if it were to happen again, something like that, that would be perfectly normal. That's the way markets move, right? They go up, they consolidate, they thrust up, they consolidate, they thrust up. Same thing back here. Okay, but again, it never stops people from making predictions. Well, there's going to be a recession in 2019, 2020, 2021, 2022. Eventually, they're going to be right, and they're going to be paraded on fucking TV. Look, these guys, they predicted it. And nobody is going to come and see and say, "Oh, Nick was right all these years." Nobody's going to say that. And even when I do tell you that this is it, it's game over, we're going lower, nobody's going to know. Nobody's going to invite me to fucking CNBC. Believe me. NASDAQ. Nice little grind up. Again, this one can be considered somewhat of a pause. Okay. 1, 2, 3. Somewhat of a pause. It's going now higher. Having some difficulty. Okay. All these stocks now are a little bit frothy because their earnings yield is below 4. And the bond yield is rising now to 3. So when you get that compression, people are thinking, why should I go out and buy stocks and take on all that risk when I am assured that I can go buy a 10-year and give me 3%. You see what I'm saying? Versus 4% for stocks. Okay. Now you can make the argument for tax reasons it's better because earnings are after taxes for stocks and so on, but that's getting a little bit too involved. Taking a look at the FAGs, okay. going up. They have this range that they've been in for, well, I guess most of the summer, right in here. Okay, it's just chopping back and forth. Right. This is this is a form of a pause. But again, for big tech, that's what's been driving the market, and we'll see that in the next slide, which is this one. And what you see is that, let me kind of zoom it out because it has that big thrust down. I don't know why they haven't corrected it yet, but it's a little bit annoying. Okay, you can see it better like this. So what you see is that when this is outperforming, meaning it's going up, the broader market is moving, is pushing everything along, and big tech is following along. Okay, since 2016, what's happened is reverse. That big tech is driving the market higher, and the broader market is not. Now that's a problem if you have a portfolio and you're looking at it and you see that the index is up, I don't know, 15%, and you're up 3, and you're saying, well, what the fuck is going on? I don't understand it. I got the wrong stocks or whatever, you know, my 401k or whatever the case is. Well, this is why. Okay, the broader market is not pushing things along, so you're not going to see the same returns most likely in your portfolio. Now again, it's at a key reversal area, potential reversal area, which is testing the previous low. We have a formation that is typically bullish. Okay, but remember that if big tech is to start crashing, and then the broader market is going to just crash a little bit less, and I'm not saying it's going to crash, I'm just giving you an example, then what you're going to see is this is going to start outperforming. Why? Because big tech is dropping faster than the broader market. So just be aware of that, you know, it can go either way. If you take a look at the world stock index, it hasn't really done much, and it hasn't done anything since almost the beginning of the year. It's been going sideways in this wedgy kind of pausey uh, formation, which again, you know, um, big tech is what's been leading everything, right? What has performed well this week, and if you weren't in it, then you couldn't have gotten it, is this. Okay, this was building pressure. You had the thrust down move, it started to build pressure, and then ultimately it resolved to the upside. Okay, now more likely than not, it's going to test the previous high and probably reverse. Okay, and then we'll see what the structure looks like from there. The same thing is happening now in China. We are on the verge of a breakout, and the here is the pattern. Now let me zoom out. A couple of things to note. One, where did it fail? At previous highs. That's number one. Number two, it's been in this long-term uptrend, and this is a correction. Okay, and as I always say, when it has this formation of tight, ultimately resolves to the upside. Doesn't mean it's going to go to the moon. It's not what I'm saying. I'm just saying that right now, price is starting to outperform to the upside. So, as a risk-reward play, and I don't know if this is going to go, but as a risk-reward play, right in here is a nice little entry where if it turns back down, you can stop out. All right. If we're right, this should at least test the previous high and possibly come as high as to test the under part of this longer trend line. All right. So that's about it. Bitcoin we talked about. We're still looking for that next leg down, which would be very viable. Again, it's those structures that you have to understand, and you have to come down to patreon.com/mine this one and learn how to apply them. It comes up, the thrust came down, now we have a bear flag. That's fine. We're looking for that next leg down. This is buyable because we're going to take it to the upside. That's it. Little longer video than I needed to, but you know, you have to stomp out these fake MMTers. They have to be exposed, and that's just the way it is. I'm not going to back down from anybody. You know, if they want to start being, you know, legit. They want to start bringing good stuff to the table. I'm all for it. I'll support them even. I'll high five them. You know, I'll give them thumbs up and little hearts and whatever you little fake MMTers do all day long. But I'm not gonna back down when I start seeing bullshit and liars and all profits and we can give everybody free ponies and all this bullshit. Nuh-uh. Not me, my man, and my woman. All right, that's it. Nothing much to talk about. Let's wait for things to resolve themselves, and then we can go from there. Again, come down to patreon.com/mind this one. Be more than happy to teach you how to understand macroeconomics, real pure MMT, and charting. Not only does it apply in the real world, but you can use it to invest with. That's it. Good night. Bye-bye.